Mr. Mark Selby, how are you, sir?
Mr. Matthew Gordon, doing very well.
I'm glad to hear it. You're almost stuck up in the mountains, weren't you, at the weekend? I missed your flight.
Yes, Air Canada decided to not let me on the plane despite my 2 million mile status and getting there a couple minutes before the actual gate close deadline. But
right. What can I say? Been there, done it. It's very, very frustrating. Anyway, that aside, there's also been you've been sort of in the news a little bit here. I saw your picture pop up in the Globe and Mail, that illustrious Canadian rag.
Yes,
Tell us more about that.
Yeah, no, it was an excellent story. Niall McGee's the mining reporter, and for those of you who are not Canadian, the Globe and Mail Report on Business is sort of the main business newspaper for the country. And so, he did a couple page spread on the Valley of Death, the part of the Lassonde curve, a lot of companies really struggle to go through. And, I thought it was a well-written article. He, really, focused on the lack of capital, particularly for development stage companies. Myself and Martin Treen at FPX, were two of the companies that were featured in the article, and I would encourage people to get it. If you're, if you think it's been tough for juniors to raise money, there's a great chart in there just showing how little capital's been raised, in the last year, and even the last, we had one little bump, I think, in 2021, but other than that, it's been pretty dismal across the entire TSX venture in terms of, capital raising. So it was great to see that point made. We're having some discussions now with government to really give them a shove that, all these goodies, once we get financed are good, but you really need to look at is helping mining companies get through get through that development phase of asset development.
Right. So we're not talking about Psalm 23. We're at the valley of the shadow of death. We're talking about mining. So who is going to step in and help? You've just been through it. You've managed to, I guess you're sort of coming out the other side of that with getting all of the financing in place. But the article referenced specifically how hard it has been to raise capital. The type of capital that's being raised and where it's coming from seems to be a slight mystery. Maybe not of a biblical proportion, but it's definitely been a lot harder. So what do you think the options are? Are there new? Is the landscape becoming clearer for people to actually work out how to do it now?
I mean, not so much. I mean, really. What the article highlighted is the fact that, we got 3 strategic investors over a 14-month period, and that's provided the bulk of the capital we need to get, largely through permitting on our way towards getting some, we announced some of the key pieces of financing a little while back. And so, right now that seems to be the only, piece of it. And in Canada, the challenge has been, previously there was a number of Chinese companies who played that role and they're no longer allowed to invest in these stocks. Then they also highlighted a couple of other companies that have actually re-domiciled out of Canada just to be able to partner with Chinese companies in the graphite space and so forth. So I think I think the messages were, governments, if they want these critical minerals projects, they're going to have to think about stepping in and providing capital in this development phase during this Valley of Death, if they want companies to be able to make it through the other side. I think there was also a message in the article about speeding up permitting. Again, we've been pretty lucky. We're just about to finish filing the environmental impact statement, and which is the second phase of the permitting process. But there's a lot of other companies that have get struggled and get caught up in a very prolonged permitting period. So those are a couple of the solutions that were posited in the article.
But you and I've been talking about this. Most people are talking about this. Most investors, retail investors, have been talking about the fact that there's the lack of funding in the space, the lack of government. Well, it seems to be a lot of government intervention, but not necessarily in a good way. I think you've been a beneficiary of some of the more positive aspects of it. But if governments don't step in, if companies can't find alternative financing, I mean, you mentioned a couple of that have reverted to exiting the country. The assets presumably don't, do they? In all instances, or maybe they do.
Where the TSX companies that exited are with assets that are, they're TSX listed, but their assets are outside the country.
Oh, okay, so they're fine.
Yeah.
But for projects like yours and like FPX, they're going to have to go through the same thing and jump through a few hoops. And the good news is, I guess, the assets are North American. It's going to be hard for China or others are going to step in there because they're not allowed to. But alternative financing seems to be the name of the game at the moment. You've got to be quite creative, lay the story out slightly differently from the way you would have, say, 10 years ago.
Yeah.
Will more people follow your model?
I think so. I mean, from what I can see, and again, I mean, Martin and FPX have done a good job. They've got a couple strategic investors in place as well to help them. They're on track to get their feasibility study complete and then kick off the permitting process. But it has to come from that combination of strategic investors / government funding, at this point, because the big dollar checks just aren't available from the bottom market. In the article, they had it was just over $400 million US is available. It was raised by all TSX venture companies. So, that's for big projects. That's not a lot of money. And again, that's the entire industry. So.
Right. Well, I'll maybe put a link to that article. I think I said that they're a kind of subscription model, aren't they, at the Globe and Mail? But yeah, okay. I just had this problem which has been around for a long time, and people have to figure out new ways of solving for those problems. Should we start off with, as we normally do, with what's happening in the nickel market? It doesn't seem to be heading towards that $20,000 number of yours at the moment. Still confident?
Yet.
Yes. Okay.
Yeah, and apologize. We were hoping to do it a little quicker, but it's been a pretty hectic 3 weeks. Last time we talked, it was before the election, and I think I made an absolute horrible election call, which is why I'm in mining and not in political punditry. So as soon as Trump won this, something I didn't see. We saw a whack of pressure right across the board on the base metals, I think, because it was such a resounding victory, and it was clear that we were going to see Trump tariffs and Trump restrictions on all things China, meant that investors thought, if China was going to get impacted by this, maybe not so good for base metal. So we saw a sell-off right across the complex. It took nickel back down to the lows that we saw back in the 15,500, which you've bounced off of a few times. What was good, because we did bounce off it, and we popped back up over 16,000 a few times, and we're sitting there right now. Again, over the last week or so, the theme that I've been pushing on in terms of, ore restrictions in Indonesia, the fact that they've had to import so much ore from the Philippines is really highlighting, the issue of ore availability in Indonesia, and maybe it's not such an unlimited one-way supply. So again, I think we will see, prices pop back up towards 20,000. May not get there quite before year end, because it's got to, recover from the momentum whack from the Trump election. But I still think, we will get up there by January as these, Philippine rainy season kicks in. Mine production from the Philippines really gets cut back, and in the end really squeezes supply in Indonesia, for the next 3 or 4 months.
Okay, I've got to ask you this then, because there's two things going on there with the Trump factor. One is obviously tariffs, much talked about tariffs, people trying to work out what's going on there, but also subsidies on the other hand. Right, so there's a little bit of conversation around cutting subsidies for electric vehicles. Drill, baby, drill. It seems to be the mood at the moment. What do both of those things do for the electric vehicle space? What do they do for the nickel space?
Yeah, so the key thing is, like, going to the election, I've always told investors it didn't matter who won. We're going to end up in the same place with nickel, just via a different path. So, again, there's been a bunch of stories and speculation over the last 2 weeks. I think you'll see Trump cut the subsidy for electric vehicles, so the cash out the door to people to buy an EV. What will remain in place is all of the incentives to onshore, which is the biggest part of the Inflation Reduction Act that's relevant for critical minerals. That's a bipartisan issue. A lot of Trump ridings have benefited from the new new projects that are being built in those areas because of the IRA program. So I think they'll rename it something, the MAGA Build More Factories in North America Act. But
it's very confusing over here for those who remember the 70s and the 80s, I have to say. So, I hope so. Political reference there, folks, for the older gentlemen in the audience. Yes.
So in the end, they'll slap tariffs on all things Chinese. They'll create lots of incentives for North American production, and for the nickel assets in safe countries like Australia, Canada, so forth. Will continue to remain in good shape, and we'll see significant incentives for bringing this new production on in North America remain in place.
Because I mean, to the uninitiated, the outside like myself, and so I'm looking at tariffs. I'm going to whack a bunch of tariffs on. We're hearing it here in the UK. Britain is not immune to Trump's machinations. 25%. China worse. Some talk of up to 100%. Those things are great if you're in country or within that kind of North American sphere, big consumer. But at the same time, we're saying to North American automotive manufacturers, look, we're going to stop giving you subsidies, but we've put tariffs on these other guys, so you should be able to make hay while the sun is shining here. Is that the kind of message to industry, that we've got to stop government spending on stuff that he's not that into, which seems to be, most things green?
Yeah, I think. I mean, I think that's the case, but I think in terms of reshoring stuff into North America, they're definitely going to do it. I mean, Elon Musk, saw what happened. Trump was always praising Putin, and I think Elon Musk somewhere along the last year or two figured out, hey, that oligarch model, kind of worked for those oligarchs in terms of, basically benefiting significantly from being close to the top guy, and I think that's part of the reason that he's there. So, there's some interesting things, like, a huge portion of Tesla's revenue has been the car companies not hitting their targets in terms of gasoline efficiency, and then they have to basically end up effectively paying Tesla because they're on the good side of it. So, and that number's been huge. I think it's like 30% of Tesla's overall cash flow over the last 6 or 7 years. So we'll see if things like that remain in place. But I said, I think EV subsidies gone, but you'll see the rest of the industrial incentives, continue forward.
Interesting to see it. Like I said, there's many. I don't know. It's kind of mystery about how things work in at those sorts of levels to most of us ordinary folk. But yeah. Right. We shall see how it all plays out. Numbers for September. You kind of talked about some of the fundamentals, talked about some of the price moves, but what are the what's the news from INSG?
Yes, back from politics to the equally exciting world of International Nickel Study Group. We've seen they had their numbers for year-to-date September, which published in November. Demand's up 5% year-to-date. Supply growth is up 4%. Most importantly, through the stats there, you're seeing mine supply in Indonesia flat year over year. So, the overall number year-to-date is still up, but the last 3 or 4 months have been flat. And again, I think we'll see the Indonesians continue to manage that pretty tightly until we see nickel prices move higher. Again, there's been no growth in Philippine mine production. So this whole thing of ore going to Indonesia means it's not going to China. I think they've been lying about the ore stockpiles in China. They do that in other commodities. So that's going to set the stage for a squeeze. Surplus year to date is about 90,000 tons. Again, that's significantly lower than the quote experts who are talking about 200 and 250,000 tons surplus. Again, I think that's still a little overstated because they don't pick up for the inventory build that's happening as we build out new capacity for electric vehicles. Demand's a little light from our forecast, but again, with China and everything this year, I think we'll see a bigger rebound in growth next year.
Okay, well, let's get on to the supply side of things, because if we are going to have this kind of ex-China model required for funding, ex-China model in terms of tariffs, and and some of the things that you've been able to put in place with your company as well, supply is going to form a huge part of defining metal prices going forward. Not all as advertised, but we do have. We go to New Caledonia. They've actually restarted following the riots. That's good news over at Goro, or was it called now? Prony.
Yeah, Prony is the new name for Prony nickel. Yeah. So yeah, and I mean, New Caledonia was, the whole country just about fell apart for about 6 months. The Koniambo project in northern New Caledonia has actually closed. They're looking for a buyer. In the southern operations, which were previously Inco/Vale, owned by a consortium with Trafigura in there. Again, it wasn't safe to operate. So things have calmed down enough now that they're looking to restart production. Again, that's 30 to 40,000 tons per annum at a 3 million ton market. So it's nothing too large. I think a few weeks ago too, we saw a restart in Madagascar. That project had a rupture in the ore pipeline that ships ore down to the processing plant. That's there, and that'll be ramping up. But again, you're talking about 30 to 40,000 tons of nickel, which is sort of a percent of supply. So nothing too long. And now we're seeing the announced closure by BHP in Western Australia really start to kick in, and so that'll be that whole pipeline of supply is emptying.
But yes, amazing. Crikey, I know that. What is it, 800 million to shut it down? Is that right? It's a big number.
It's a big number.
Big number.
Yeah.
Talking of big, Barnatburn. Now, I wish we were speaking in about half an hour's time because it'd be brilliant, because it'd be the anniversary of 1314 Barnatburn battle. But that's again cultural reference. Today's show is very highbrow. That's what I'm going for.
Random history facts with Matthew Gordon.
Yeah, absolutely. I think it's a whole new series we could create. Anyway, Bannockburn, your Bannockburn, how are things going?
No, very exciting last few weeks. I mean, again, our primary targets are big bulk tonnage ultramafic nickel deposits, but some of that nickel can get remobilized into higher grade deposits, and we were expecting to bump into something. We didn't know where we're going to bump into, but very glad at Bannockburn, we hit 4 meters of 4% nickel within 12 meters of 1.6%. Very exciting. It showed up at the right place geologically, a geophysical target that we're going after. We've got other targets in the area, so we'll be continuing to follow up in that area. And again, once you have systems that start to remobilize nickel, just a question now to see sort of how big the pools of nickel that got formed. And so we'll continue to take a look at that through the first quarter and through the remainder of 2025.
Okay. And just sticking in and around the area, FPX, you mentioned earlier, how are things going?
Yeah, so FPX, they, for their Mitch deposit, which is a second deposit they have up in the Yukon. So there's a trend of rocks that go from central British Columbia right up into the Yukon. That hosts a handful of ultramafic nickel deposits, and again, did a surface sampling program, outlined a fairly large structure. So again, good to see. We need all the clean green nickel projects we can, and so good to see the results from that program from those guys.
Right. Okay. And we're going to stick with North America for a bit, and then bounce over to Asia in a second. We're sort of Asia. Talon, the much mentioned Talon.
Yeah. So. Good news. I think if we talked, 3 weeks ago or so, they had drilled a discovery hole in their properties in Michigan. So these are a large land package that Henry Ford actually once owned. They had picked it up from another group about 6 months ago.
See, highbrow. Oh, that's what we're going with.
Yes, very much. They got some excellent drill results. So not the high grade multi% that they're seeing at their main property at Tamarack, but large intervals that are shallow. They'll probably, again, they visually describe the core. It'll be kind of 1% nickel or more, with probably some copper and PGMs in there. So quite exciting from that front, because again, long intervals, shallow, and good grade are a nice combination. So keep an eye on that. As things move forward, and congrats to the Talon team for making those.
Absolutely. Yeah, we've always been fans. Alliance Nickel, they've been in the press.
Yeah, so Alliance Nickel. So this is one of the Australian laterites. Before projects were pressure acid leach. What's interesting is Alliance Nickel is planning to use heap leach approach. So again, getting the nickel out of solution, getting nickel into solution, and then they're planning to go all the way to a nickel sulfate. They're looking at basically capex about $1.6 billion Australian, with a $5 a pound nickel cost, just under $5 a pound nickel. And again, decent IRR, decent NPV. And so good to see that project move forward. Key here is, there's Atlantic Nickel in Brazil, which is operating at a small pilot scale right now. So that'll be a risk. Again, hopefully they've done enough test work to feel good. Obviously they would have to be able to put feasibility study out. And then the other piece that's going to, all of these projects are going to struggle with is just the cobalt price. We've seen a huge increase in cobalt supply from the Congo. You're going to see lots of cobalt come on the market from Indonesia's pressure acid leach plants. And cobalt prices are trading at a relatively low level now. And it, again, tough for me to construct a scenario where that changes given that amount of supply going through. So as long, again, just need to look at the sensitivity of the cobalt prices. If they're good, even at today's cobalt prices, then that's okay. But that's just something if you're looking at some of these stocks, just to keep an eye on.
Yeah, for sure. And then one which we talked about this in the past about when sort of companies, well, actually, let's go to Asia battery metals. Let's talk about that before I get into what I want to talk about.
Yeah, I think we've mentioned this once or twice. Some pretty interesting results. So again, in one of the few parts of the world where you can find nickel sulfides, and yeah, they've come up with some pretty decent grades. The discovery hole there was 8 meters at 6% copper, 3% nickel, with some precious metals, cobalt, which is fantastic. They've stepped out to another. I can't sure whether another target or along the same structure, but anyways, about 500 meters away and hit 19 meters of combined mineralization, part massive, about 2 meters of massive sulfide and about 2.5 meters of semi-massive. Again, they haven't given grades yet for that, but interesting. Again, if you start to see systems that can generate high grade nickel, then it'll be interesting to see if they can find sort of big enough pools that they can get some value around. But again, very nice to see new discoveries made, because we don't get many of them in the nickel business. So kudos to that team.
Yep, absolutely. We need it all to work. And then I just want to talk about premium nickel resources, or premium resources. They basically came together with North American Nickel to create premium.
Yeah, they're advancing the
resources.
Project in Botswana. Yeah, they dropped the nickel out of the name, and so again, they have as much or more copper as they do nickel and other metals. But they published a resource a while back. They've been releasing a series of infill drilling results, again, which have been pretty consistent with the kind of results they showed previously. They're looking at also extending the mineralization as well. So, another decent set of results out of that group.
Okay. So it all seems mostly positive. And I guess maybe that we could take full circle back to the beginning of the conversation around this kind of valley of death thing, the valley of the shadow of the death. It is, we're entering a very interesting phase. Like nickel price has been under a fair bit of pressure in the last 2 years, and interest has sort of come off. But when you see very few companies getting financed broadly, and specifically nickel, specifically ex-China, it paints a sort of quite interesting picture in terms of investment thesis for saying, well, can you time this right? When does the market pick up on the fact that maybe not all nickel is born equal, and it could be a good time to start placing bets?
100%. At the end of the day, the thing to remember is that, the underlying value of the asset, is the underlying value of the asset. And, it will be, if it's a good asset, will get uncovered over time. Noront, using the example of Noront, that's a stock that spent several years bouncing around 12 cents. There was a block of shares that were for sale for a while. Andrew Forrest picked those up, I think, at 18 cents. And then literally, 18 months later, after Andrew Forrest made a bid for the company, And after about 5 or 6 bids back and forth between and Andrew Forrest, this eventually went out for $1.10 a share with literally no new news. It was exactly the same asset when it was 12 cents as when it was acquired for $1.10. So, and the reason it got that was there's a scarcity premium. Again, at the 5 years ago, we'd come out of a period with very few nickel assets being advanced at that time, and Noront was one of the sort of new nickel sulfide discoveries of the past past 10 plus years. So it's hard sometimes to look at your stock and see it trading sideways for a long period of time. But if you're patient, if you believe in the asset, we will get that point in the cycle where the development assets get acquired again, and if more than one person decides they like it, you'll see pretty full value discovery on that asset. So encourage people to hang in there. It's coming.
Hang in there. It's coming. Okay, guys. Well, look, that is it for the deck for today. Mark, see you next week. Like I said, we've got to do this a bit more regularly. Things are gonna get interesting. Appreciate your time today. Thank you.
Thank you.